All right. Hello and good morning. Happy Wednesday or hump day, as it were. Hopefully, everybody's doing good out there. My name is Jacob Gabbard, and this is our live trading. We're going to be demonstrating our indicator today. As we do every Wednesday, we live trade on YouTube to show you how it works and what's going on with that, as well as go over my thoughts on the market and do some training when it's slow. So we do a lot on here to try to help traders and show you how our products help traders as well. Right now we are in an uptrend. Obviously, we are on our way to 7,000. I've said for a while now that 7,000 was very, 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 very likely. And even when we sold off back, in November, we were looking for the market to bottom pretty much exactly where it did because we took a swing long there, and we just cashed out that swing long yesterday for a very big gain. So, market pretty much following our path and our plan, and nothing has really been all that surprising for a while now. If we just look at the bigger picture, we'll get into the indicator and what we do with that in a minute. My numbers and stuff are off here. I haven't updated them since the contract roll because of Christmas break and stuff, and I'm working on some other stuff, so bear with me on this. We're looking at the sell back in November as the wave 4, and then this week we are in an ending diagonal, so we would expect this to be an ABC pattern, and that's what we're seeing so far. You see A, B, and then the C wave is actually taking shape as a diagonal as well, as you can see the kind of structure we're getting. But we would expect 70, 40 or so on the ES up to 7,100 as our target. And they came up, just short of it back. Well, technically they got over it back here because of contract rolls, but in essence, not really. The big level is actually going to be on the SPX, which is the cash market, and it doesn't do contract rolls. So 7,000, which is about 56 points higher than we are right now on the SPX, is going to be a huge, huge call wall. And I'll get into what that means in a little bit here, but that should get rejected at least, for at least a 1 to 2% rejection, if not more. And then we'll see what happens from there. So everything pretty much following the path as we expected. When they made this high back here and we came back to this level, I was looking for them to bottom pretty much exactly right here. We actually went long right here and again cashed that out. Or I'm sorry, this long here. We cashed that out. This is the 3-hour chart. It's this long here, guys. I'm sorry. This long here at, no, this is January 2nd. So this is, 17th of December. That is correct. So we got this low and we just cashed it out yesterday up here at 69.83. I'm all over the place. Welcome to the 2026 New Year. So anyway, point being, we were looking for this exact structure, and that's what we're getting so far. The biggest reason we cashed it out, I would have let it run up to the 70-50 zone, but we were running out of time on our option, so we had to cash it out. NQ is a little different, however. Hopefully my NQ chart loads here. Come on, NQ, get with the program. We may just go over here and do it. It'll be easier. Hopefully. There we go. So the NQ, after making their all-time high, has been a lot weaker. ES is basically at its all-time high again, where NQ hasn't even taken out this lower high. So we're kind of in an odd spot where it's not odd. NQ usually tops first. It just may take a little while for ES to get its final top, but we're in a spot where NQ may, we haven't confirmed this, but may have topped. And one of the reasons for that would be this prior major low right here. They took that out, which is a change of character in the market. Now, they didn't sustain below it, but that's, they're going to back test and then fail. So as long as they stay below this high right here, the bears are in control of the short-term market. It's still a bull market. We're still in an uptrend. Everything is still intact in the bull market, but in the shorter term, the bears are still in control until they get back above this level. If they get back above this level, I would look for them to come into 26.4. And from there, look to potentially reject, as that was a major rejection zone from before, just after the all-time highs. So this would be the next area, 26.4 and 5 of resistance. And if you look back at 2022, we did see them come quite high on the retrace. So it is possible the NASDAQ retraces all the way back up to here before failing and doesn't make a new high. Because again, they're so far behind the ES for the NASDAQ to make a new high. It's going to push the ES pretty high up into 70, probably 7,200 or so, maybe a little more. And I don't see that as a very viable path right now on the ES. So we'll see how it plays out. Price is the ultimate dictator. And we defer to price. We make our levels, make our reads, do everything we're supposed to do there, and then make sure price confirms it. And then once price confirms what we're looking for, we trade. So that's a big distinction about Elliott wave theory and trading. Elliott wave theory is a hypothesis rooted in scientific values and measurements and actual data based around price action tendencies that allow us to kind of look for and predict levels ahead. Now, when we predict them, that's a prediction. It doesn't mean that it's a fact. And so what we look for is confirmation before we trade. We look for a setup, if you will. So many people think that just because we say the setup is for price to go, or the target is for higher and the structure is for higher, and then the market goes lower, everybody's like, oh, so you lost all that money. No, we didn't. I mean, possibly that we lose trades. That's life. But we don't just trade because we say, hey, we got a nice move here. We think we're going to get this and then this. Well, if we're here, we don't just trade long. We want to see price come down. We want to see it hold our support zone. We want to see it bounce. And then we have a setup where we have a really good chance to go long, where we have a minimal stop right here. We have a good setup. And then we have a 3, 4, 5, 6 to 1 target, depending on where the wave 3 is targeting. So just because we have an idea of what we think the market's going to do doesn't mean we trade that idea. We trade confirmation of that idea, which greatly reduces the amount of losses that occur with that. So just a quick kind of Elliott wave theory lesson for you. Okay, so the indicator you can see on screen, the buys and sells. This blue is post-market. This yellow is pre-market. Ignore all of this. This is all low volume trading. It is not something that the indicator is great at. It's why holiday trading isn't very good, because holiday trading is low volume. So, I always take off the last week of the year between Christmas and New Year's, because really from Thanksgiving on, the volume really drops and it becomes more algo traded. And all the algos do is try to run traps and effectively do that. So it's not a great trading environment. It's a lot of chop. It's a lot of traps. It's just not where you want to be. You want to be where the volume's coming in and pushing price, and that's what the indicator's looking for as well. We're looking for, or the indicator's looking for key levels with volume, reversals that set up, meet certain criteria, and then we're looking for entries, and those entries are taken. So we only trade the regular trading hours because that's when the volume comes in. On top of that, we only trade until 1 p.m. Eastern Standard Time. So we basically only trade the first half of the day, and really that's probably too far. 12 o'clock is probably a better ending time, because the moves happen at 2 points in the day. At the open for the first hour or so, 2 hours, and then the last hour of the day, closing hour. Those are the two times that the market truly moves on heavy volume. The middle is a lot of chop. Well, we don't want to trade the close, because the close is a theta trap if you're trading options, or you're going to have to take further out options. And we take 0 DTEs, which means they expire today. And you don't want to trade that middle chop. So your trading window is the open until, I take till 1 o'clock, because that's when my afternoon call is. It just makes it an easy transition to wrap up the day. But I would say noon is probably a better time frame. But the rules say 1 o'clock, so that's what we trade to. The second thing about the indicator, so there are a few rules to trading the indicator that will make you a lot more successful. The second thing is we don't trade trend days. So what that means is yesterday was basically one, and Monday was very much one, and yesterday was basically one. So when you have a trend day like this, when you do get sells, they very, very often fail because the market is going to trade 90% of the time back and forth in a given day, and about 10% of the time you'll see these kind of days where it just goes in one direction and isn't going to give you any kind of counter trade. And this is usually clustered together because trends happen like that, right? You get some nice big range consolidation that's great for trading because it trades off the proper levels. And then you get a trend where if you got in down here, great, just ride it out. But that trend usually lasts several days in either direction. And so you get trend days that run kind of back to back to back, and it makes, for a boring week of trading usually because there's not much going on. But Monday was a trend. So we would have ignored this sell. You wouldn't have taken this, and then you wouldn't have taken any of this stuff because once it's a trend day, you don't trade. Not even with the trend. You're welcome to, but I don't, because what happens is it didn't happen necessarily this day, but what happens a lot is you start the trend and then you get the pullback, and then if you get an on-trend play, right, very often you get this for the rest of the day, and it's really hard to make money because of the theta. So on trend days, we don't trade. And a trend day is confirmed by... we'll go back to today so you can see what I'm talking about. Yesterday, also basically a trend day. They came up, broke out, and continued, but I'll show you how we define that here in just a second. So right now, we have a pre-market high, which is overlapped up here, but it's at 692.29. Okay, that's our high zone. 690 is our pre-market low. That's our low zone. And what we're looking for on most days is the market to stay within this range. So you have, about a 3-point range to trade off of most of the time in a given day. However, there are days where you have trends. And a trend is defined by breaking the pre-market high or pre-market low in a downtrend. But we'll go with the high since we're up here. Breaking the pre-market high, and then back testing either the 8, the 21, which is in blue, or VWAP, which is in black right here. Testing one of those levels and then making a new high. So once it makes this new high right here, that's a trend day and we don't trade it. So it's possible you could have got a sell here that came down. It might even have been a winner. But it's possible you got a sell here that was a loser. They come back up. They take out that high. It's a trend day. Go take a walk. Go eat lunch. Go have a drink. Go do something with your family. Do anything but trade that day. We don't just blindly get long or short with the trend because very often they can come up and fail. Not very often, but there are times they can come up and fail. And so we don't just blindly go long and chase. That's not a good trading style. We didn't get an entry, so we just move on to the next day. The thing about trading is the less you trade, the more you will make. In other words, if you take high quality trades and there's not that many of them in a day, you will make way more than trying to trade every move or trying to catch every little pullback or every little bounce or everything that's going to happen in the market. So the less you trade, the better you will do. So if the move of the day is a trend, then don't get in the middle of it because it's going to be very complicated. It's going to be hard and it's going to shake you around. You're going to get frustrated. You're going to chase. You're going to overtrade. You're going to get caught up in chop because trend days very often have an hour or two of just nothing but chop. It's just not a great trading day. Just like the end of the year is not great trading. Trade less, you'll make more. Get that concept into your head and you'll be a better trader, I promise. 1 second here. Let me put to illustrate that here, let me get one thing set up. I'll show you how we did last year, just trading within the rules of the indicator, guys. We're not trading, I realize it's a nice amount of money, but we're basing this on a $100,000 account. And let me get the form. I'll put it on here and show you how we did for the year. Oops. One sec here. So based on a 100K account over the last 2 years now, using the indicator following the rules that I've stated, I'm almost there. I have to paste it into the screen because it won't let me bring up another window and show it. So give me this. Here's our data for the last 2 years. And you can see, guys, we have losing months in here. This is not, no, there's no foolproof system that's going to be like, hey, look at how amazing we are because we never miss a trade. That's a lie. Everyone misses trades. Everyone loses. Everyone has issues. Okay, can you guys see that there? For the year, we did 85,250. And again, this is based on a 100K account that we started back here in January of 2024. So this is January 24 back here, all the way through, and then this is January 25 on the right, all the way through. Last year we made 35,000 as we tweaked the indicator and the rules to make it work better. We worked our way up to 50 contracts, so we made money. So once you get a big enough, once you have enough capital to support it, you can move your number of contracts up. So now we're trading 50 contracts per, and over the last 2 years we've made $120,000 on a 100K account. So that's pretty good return on investment. It's outperforming the market, which is what matters. And here's a key thing to take with you. If you're trading a system that is not outperforming the market, so in other words, if the S&P 500 at the end of the year did better than you did, your system is not working. Get a new system or just trade the S&P 500 and just buy and hold it because you'll do better than trying to beat it. We try to beat it. I went through, we not only try, we do beat it. We outperform the S&P quite a bit. And that's a very important thing to understand about trading. If you're not able to beat what the market returns on an average, then you should just be holding the market because you're losing money by not doing that. Williamstown, good morning. Welcome to the stream. Peter Crowley, welcome to the stream. Crowley, welcome to the stream. Good morning. Prabs, welcome to the stream. Good morning. George, welcome to the stream and good morning. Any questions? I know that was 20 minutes of just me talking there. Anybody? Siva, welcome to the stream, or V Siva. Good morning. Glad you guys are here. I'm running a great deal, guys. There's a link in the description on the indicator if you want to check it out. You do get a 30-day money-back guarantee. You're getting, my price action masterclass, and you're getting advanced Elliott wave theory with the indicator on that link, or you can get 25% off the yearly indicator, which is a great deal as well. I never run that. And right now I've decided to discontinue. I've been running a sale and I'm just going to continue it for now. It's been pretty successful and people are liking it. So get on it while you can, as those prices won't be there forever. If news is coming out at 10 a.m., do you still take trades right before? Yeah, I don't generally worry about it. It depends on the news. So there are certain things. There are very few things that trade during our trading hours that matter, but we still take the trade. It's not a worry in most cases, with the understanding that even if we have a stop, our stop may get blown through. But there are a few exceptions. Like if the Fed was early in the day, we would not trade it. If CPI was during regular trading hours, I would not trade it. Those are the two main ones that you want to stay away from. And then there are a few things, I think housing starts and stuff that can be volatile. But for the most part, the 7 a.m. news isn't crazy. It's just a catalyst, and the indicator's already seeing what the underlying money's doing. So very often it's right. And we are able to snag that move. From an informational standpoint, guys, you have to understand that losing is part of trading. You have to. I don't care whose system you go with, what they do, how they do it, you're going to experience losses, and you might experience several losses in a row. And the amount of wins doesn't matter. It's an irrelevant stat. The risk reward is the relevant stat, because if I have a 3-to-1 risk reward, I only have to be right 1 out of 4 times to break even. So it's only a 25% win rate to break even. So anything better than 25% and I'm profitable. So if I have a 37% win rate, I'm actually doing pretty good on that trading style. So don't worry about how many trades are won or lost as far as just the percentage. Did you win more than half your trades? Because not all trades are created equal. So the real definition of the trading plan is what is the risk reward versus what is the winning percentage. Then you have something to trade to analyze. So make sure you understand how the system works before you judge based on a win-loss. And trading is just an edge. It is simply an edge. People want to think that you can get in and you find something that wins all the time or wins 99% of the time. That's just not feasible unless it's a meaningless trading system like you're trading for a penny or something. And even then, I think you would struggle. You have to understand that losing is part of trading. We may have a losing day today. I've had several of them on Wednesdays. I do this on Wednesdays for whatever reason. Wednesdays have not been great trading days of late. But overall, you saw the numbers that we produced for the year, and we had a $2,000 losing month in May and a $5,000 losing month in August, and those aren't fun. But the 14,000 January, the 24,000 October, the 26,000 November, the 5,000 June, the 9,000 March, those are all very fun. And there's way more of those than there are losers. So you have to understand that you're going to have some bad months just because the market gets funky. As much as I'd like to say predicting the market is easy and possible, which it is possible, it's not done at 100% rate. It's done at a statistical rate, which says in this situation, this is the most likely thing to happen. So that's what we want to play for. Remember, you want to be the casino. Do the casinos win every bet? No. Are they billion-dollar businesses? Absolutely, because they win a ton of bets and they have the edge in every single game. So you want to be the casino, not the gambler. The gambler thinks he can go in and beat the casino. The casino says, please keep coming back. You want to be the casino. The casino takes the statistical edge. It's the reason that the player on 16 never knows what to do and the dealer smacks it every time, because the casino knows it's the right play and has no emotion in the game. You were like, oh man, I got to get a 5 or under. That seems hard. You have to understand that trading is all emotion, and so is gambling, and so is anything that requires money or love or food, lots of things. But especially money and love is all emotion. And they want you to be as emotional as possible when you're trading, because you will make the worst decisions. Think about dating. Think about the girl you met one night and decided you'd propose to her the next day. Now, I never did that, but people do. Think about the stupid things you've said when you're drunk to people because you're mad or upset or sad, and then you wish you could take it all back. Think of the stupid things you've done to your exes because you were mad or angry or sad, or the stupid gifts you overpaid for someone you loved. All of that is emotional buying, and all of it is bad decisions that you regret later. That's all trading is. Eliminate emotion. Be a stoic monk, have no feelings, and trade the market as it says, and just understand the statistics will play out over time. That's the point. If you do that, you're the casino. If you do everything else, you're the gambler. Silver thoughts. I would just this stream is more for the S&P and ES and NASDAQ. If we got into all the other stocks, it would take forever. I'll just say that I am at a point where silver's risk is starting to outweigh its reward, which is why we bought silver. Well, we bought precious metals back in April of 2024. Back when this, so we have this fund over here. I'll show it to you. It's called EK Wax. If I can get back up to it. Right here. We bought this at 49. It's a precious metals fund. It's currently trading at 153. We put our 401ks in this. So in April of 24, I told everybody that the S&P's risk was rising, and I still believe that's the case. And while the S&P has gone up, obviously it's not competing with gold and silver and all the precious metals. So we bought this at 49 in April of 24, and this is what's great about our rooms. We don't just day trade and swing trade. I give you other things to look at as possible destinations for your money, but we've trimmed quite a bit out, but it's well over 3 times the value. So 300% in a year and a half, almost 2 years on your 401k is pretty good if you like, making money. So my thoughts are, though, now silver and gold are both in that point where if you go back historically and look at silver's last big run, it gets vertical at the end of the metals complex bullish run. Silver is the key. And when silver gets like it is right now, it can run for a while. I'm not saying it's done. I'm not saying we're going down here. Silver can be vertical for a while, but when that vertical run ends, it ends viciously and with a crash. If you go back and look at the last run, I think it was maybe 2008 or something. I'd have to go back and look, but you'll see silver go straight up to the moon and then straight back down. So I think silver's risk is getting higher. I don't think I still have money in silver, so I'm not out, but I have trimmed my position quite a bit. Yeah, the Mentor Q levels are updated. They are trading at the 0 DTE gamma wall, which means they're going to be in positive gamma really close to the open here, which is in 2 minutes. So yeah, they are updated. Our 1-day max today is all the way up at 700, I think. Oh no, 697.50, and our 1-day min all the way down at 686. So pretty wide range today. We might see some volatility. We've had 2 big run-ups from the S&P, so you might see a little bit of chop to downside today. We'll see. They're at a pretty good resistance to start. Okay, we got to get our trade ready. We're going to be looking for a sell at the open, and we'll likely get one if they have any kind of down move, so be ready for that. And I got to get ready for that too. All right, get set up. So I get my trade set up so that I'm ready to take it right at the open. And I have a pretty wide spread on it. Hopefully this sell stop sticks, otherwise we won't get the sell. So I got a 692 put currently that I got set up to trade. I don't have it. I'm just saying that's what I'm sitting on to trade should I get an opportunity. I think we likely will here, as long as they can hold that sell stop. If not, we may have to wait for the first 5-minute bar. Now they are going to be trading really close to the pre-market high here, so we have to watch that for a trend day possibility as well. Okay, the sell flashed there. We got 104 here. My stop's going to be 692.60. And we'll see if they're able to hold here. They broke above the pre-market high, so this could turn into a trend day. But we did get in there for our short at the open. We'll see if they're able to hold. All right, moving down nicely here. So when you get a 10% win, which we just hit, what we do is we move our stop. So we're going to move our stop down 25 cents. So our stop is now 35, 692.35. We don't take any profit until we get a 20% win. When we hit 15%, which we're really close to right now, there it is. We move our stop to break even, so we move our stop to 104. And we're going to be looking to take at 125. We're currently sitting at $1.18 with a stop of $1.04. So we're break even at worst on this trade, and at best we'll get half off at 20%. At best we'll run down and win, you know. But the worst we can do is break even right now. $1.18. We need 7 cents here, and we'll get a little bit of a winner and see how the rest does. Got to break through VWAP. There we go. Almost there. Come on, hit that 125. Oh, I got to 124.5 on mine. Come on, hit that 125. They're going to struggle with VWAP here. Man, they got within a half a cent so far. Let's see if they can push down one more time and stick that 125 landing. Some of you guys may have gotten it there at 125. I did not. I saw 124.5, but never got 125. Yeah, struggling with VWAP on the first time through, that's pretty common. They're still pressing on it, though, so if they can break through with a little bit of force, we can look for them to come down to 691.39 next, and then we'll see what happens after that. The NASDAQ is the problem here. The NASDAQ's not playing along. If NASDAQ's got a green bar right now, so we may miss this by a half a cent, which would be really annoying. You know, it's not like it's a big win, but a win is a win is a win is a win. Lock in that first half. Hopefully the NASDAQ starts to weaken here. We're seeing the ADD drop like a rock, which is good. That's something you want to see. It opened at positive 600. It's down to 354. So in the first 5-minute bar, it's already dropped 250. That's a good thing. All right, they closed right on VWAP. This will be the key right here. Can they hold and push down any further, or does it get bought back up? Looks like it's getting bought back up. And yeah, we just got stopped out at break even. So annoying, but no loss, no harm, no foul. Just annoying that we missed that by a half a cent. Now, the ADD is not supporting this move up, so I would still look for a sell here to come in. And if we get it, we will reopen that sell. However, if they make a new high, that would be a trend day, and then that becomes a little bit tricky. You're not supposed to trade after that, and that is the official rule. The issue is, though, outside of the indicator, if you have the ADD failing like that, although it's starting to bounce a little bit, so we'll see. We will have to follow the rules, and that is what it is. We've had 2 trend days in a row to open the the year, might be looking at our third. They're right at yesterday's high. That's where the pre-market high kind of went to, and then they spiked through the pre-market high above yesterday's high and then retreated. And they're trying to test this high again here. So we'll see if they're able to hold that high and give us a sell. NASDAQ's starting to turn red, so there you go. They're just not in sync right now. ES is already in a sell, and NASDAQ is now trying to get back into a sell. So if we get this sell, we'll reopen it. Try it again. It's all about the NASDAQ right now, though. So remember, if you didn't catch that, when we enter a trade, so let's say the trade cost us $1. When we hit $1.10, we move our stop down 25 cents on the SPY. That protects us against bigger losses. It helps us trade more responsibly and limit our losses while letting our gains run. And then once we hit 15%, so at $1.15 on that, we would move our stop to $1 on the option price, so break even. And that's what we did on that last trade. We were up to basically a 19.5% winner and failed there. So that's what we did on moving our stop there. And then after that, we trail our stop about 50 cents roughly of price. So if we get up to $1.50 at $1, that's where we start to trail. And then if it goes to $1.60, we move up to $1.10 as our stop. If it goes to $1.70, we move to $1.20, so on and so forth. This is a heavy resistance zone we're in right now, up to 693. So you can see the two call walls here. You have a 0 DTE, which is an important one. They want to stay below this at the close. Not necessarily now, but for the day, they want to get back below this. Otherwise, we're in positive gamma and we'll squeeze. And then you see the big call wall up here at 693 as well. So this is going to be, this zone of 692 to 693 is resistance. So we would expect some rejection here, potentially back to the 691 level would be the most likely place. Pre-market lows all the way down at 690. There was a spike, it looks like, here at the open of the pre-market session. If it's later in the day and the indicator says buy, would it be good to sell puts and capture the decay? I honestly have never looked into that type of strategy. I don't know the answer to that. I would just avoid trading later in the day. Cats at home, morning. Happy New Year to you. Interwave flow did the mint, yeah, especially yes, they did. ES did not break the pre-market high yet. Does an exact touch count start trend day evaluation? So I evaluated on the SPY. You can evaluate it on which chart you want, each chart on its own. So the SPY has broken the pre-market high and it's coming back above it. If that coincided with an exact touch on ES, then so be it, because it's a 25 point pip. And the SPY, moves in pennies. Okay, there is the move above the previous high, but it's by a couple pennies. I'm going to give them a chance here. I'm going to give them one more sell chance because the ADD is just cratering, and this doesn't support. It's not supported. The banks are red. RTY is red. So this move up isn't supported. So I'm going to give them one more shot to trade here. And then if they fail, we'll call it a day. There's one other rule I didn't talk about. That is the 3 strikes and you're out rule. That's another capital preservation. We take 3 trades. If they all fail, then that's it. We're done for the day. We'll come back tomorrow when it's a better trading day. Some days just aren't meant for trading or just aren't working out for the type of moves we're looking for. So we want to limit our exposure on those days. We give it a couple shots. We see if it works out. If it doesn't, we move on. And you know what? If we move on and the move still happens and it goes on without us, guess what else goes on without us or with us? Life. Life goes on, because in another day, there's going to be another 10 trades or 5 trades or 2 trades, depending on what markets you're looking at. There are a ton of There are thousands of stocks and ETFs out there and plenty of places to trade. So don't force trades, don't chase, don't do any of those things. All right, there's the trend. Still very confusing. So given the ADD, it's let's see, is the Mag 7 pumping? Usually when the ADD is failing, so they're okay. Meta's red. Microsoft's doing nicely. Yeah, you got Microsoft, Netflix is bouncing, Amazon's bouncing, Tesla's bouncing, Apple's slightly down, Google's bouncing. So you got, the Mag 7's kind of pushing the market today against the ADD. So you're seeing the ADD decline while the market is increasing, and usually that means this will get sold at some point. Not sold like 10% down, sold like a decent retreat. So they may come back down and test the lows and then go higher, or they may break the lows. We don't know the answer to that, but usually this is going to get sold in some way. And you're seeing a little bit of selling now. So we'll see how it plays out the next bar or so. We're still in this heavy resistance zone. And to be very clear, if we take a short here, if we get a short and take it, that is not technically sanctioned by the indicator rules. So if you're following the rules and don't take a trade here, perfectly good. You're probably right, honestly. Sometimes I let my brain and bias do things or trade based on the experience of 20 years of doing this. And usually the idea I have is right. Sometimes they play out like they should, and sometimes they take a minute to play out, which usually causes a stop trade. So you get like, looks like it's going to sell, pops up, and then finally sells or whatever. But to be clear, if we take a short here, it would not be a valid indicator trade. But all of my trades do get booked. Meaning they're on that stat sheet I showed you. ES is, let's see, what high did they just reach? 69.96. I find it, is that the prior high? Above, okay. Oh no, prior high is going to be back here. Yeah, it's basically the prior high. They spiked through it, and now the question is, how much supply is left here? We talked about this in my room yesterday, that off of this, you had a sell down low, a dead cat, and then a new low, which tells you the supply in that area was pretty good. So let's see how that plays out. They spiked above it. So there's several ways you can reject a level. You can come up just short of it and retreat. You can hit it exactly and retreat, and you can spike above it and retreat. So typically what you want to see for continuation is you want to see them claim the level, back test it in some way, not on the same bar. You want to see another bar here. Back test it, either come back down below it or tag it exactly, and then make a new high. That's how we evaluate trend days as well. You want to see them back test this area, hold this low at a minimum. They got to hold 69.84, but back test, and then if they do that, that's continuation, and you should look for them to squeeze at least up to 7,000 at that point. But I would say higher toward that 70-40 level. But these are the types of things you look for in price action. So they close that bar at the level. That's my black line there is the prior high. Now we'll see if they're just going to continue straight through here. 7,000 is going to be huge resistance. So they may go a little higher and tag that first. That would probably make more sense. But if you're looking for continuation, you'd, again, like to see them back test this bar after getting clean above it. So what you'd want to see, if you want to see continuation, I would say I want to see them hit 7,000, back test this zone somewhere and reclaim. And then they should be looking to take out this high, and that would be very bullish. Do your trades on the open have higher or lower winning percentage than later trades? The open is too volatile for me. I don't know. I don't analyze each trade in each location. I take the trades that are given to me within the rules, and it does really well. But each individual trade is irrelevant to me. It doesn't matter. I don't care. I don't care about any single trade. I don't care about any 20 trades. I don't care about any, quite frankly, 100 trades, because we make, I don't know, 2 to 3 trades, probably close to 70, 80 trades a month. And we have losing months. We've had back-to-back losing months before. So, 120 trades of overall losing value. But over thousands of trades, we have tons and tons of winning value. So losses to me are irrelevant. They are part of trading. I try to explain this over and over and over again, and you must hear it if you want to trade and be a successful trader. You must hear that the trade is the trade, and some are going to win, more likely will win, and some are going to lose. The statistical analysis of that, let's say it's 60-40, that doesn't mean out of 100 trades, 60 are going to win. It means you might get 200 straight winners, unlikely, and then 100 straight losers or 80 straight losers. You might get 10 straight losses and then 25 straight wins. Things don't play out 50-50. You don't flip a coin and every time it goes heads, tails, heads, tails, heads, tails. It can go heads 20 times in a row. I've seen it. I've seen roulette go the same color 20 rolls in a row or more. But it's 48-48-2, with the two greens, the 2%. Edges are long-term stats. The trades are the trades. There's no other way to put it. Every single system works on edge. Edge is simply a statistical advantage over the market or over the gambler or over anyone you're against. And then you play that out. When I'm a big Kentucky basketball fan, and when Rick Pitino came to Kentucky to fix what we had, he said this 3-point line that they just introduced to college basketball at the time means that I only have to be 33% on 3 shots, and you have to be 66% to get more points than me if you're making 2-pointers. So I'm going to shoot a ton of threes, because even though my make percentage is less than your 2-point make percentage, over the game, me having 7 more 3-pointers than you is a big deal. It's just an edge. It's a advantage. So trading is simply an advantage. It's poker. When people say poker can't be beat, no, it can. That's why the same players have 10 bracelets and 5 bracelets and 4 bracelets and all the stuff. It is beaten. It can't be beaten every hand. It can't be beaten every game you sit down at. But if you play the right way over time, you will make money. If you play the statistical advantage over time, you will make money in anything. It's the law of big numbers. Rick Pitino screwed up the Celtics, though. Yeah, well, he's not a pro guy. He's got too much ego. Pro coaches cannot have ego because the players have all the ego, and if you have all that ego battling, you're not going to be very successful. So, yeah, he did the Knicks and the Celtics, really. He struggled with the Knicks, too. He left the Knicks to come to Kentucky. But I do believe the man is, even though he left Kentucky and went to Louisville and kind of has a slimy past, I think he is the best college basketball coach that's ever done it. I mean, he took Kentucky from a program that was basically the death penalty to a national title in not that long a time, and a national back to national power. And then he went to Louisville and took them to a national title. He took Providence to the Final Four. He took St. John's from a nothing to the Big East champions in 2 years. Everywhere he's ever been, he's been an incredible winner. And he's done it not just at one place. If you're at UCLA and you're John Wooden, you had a 10-year run where you had, Lou Alcindor and Bill Walton. That's pretty good to have. And then after that, it was over. And UCLA's really never been relevant since. And he only did it at one school. So I don't know. I think Pitino's probably the guy I would want coaching my team. Krzyzewski's really good too, but Again, one place with that he built. Duke was a blank show when he showed up. Now we're off on college basketball. I could talk about that forever, so I'll get back to the trading. So we're getting rejection. Like I said, whether they spike above it and reject or they reject it directly, that level should be rejected, and it currently is being rejected. They didn't get quite up to the 7,000 level, which tells me that they want to go past the 7,000 level, because if 7,000 was the end, they would have tagged it immediately and then been absolutely rejected very strongly. So we're looking for 7040 to 7100, so I do think that they will go beyond 7,000. But when they get very close to a number and reject, even if it's a small rejection, that tells you that the number wasn't the number. In other words, they got really close to 7,000 here. Oh, we are on the ES chart. They got really close to 7,000 here, but didn't tag it and retreated off of it, which tells you that this wasn't the number they were looking for. It tells you that this is going to be bypassed. Slow sledding so far. If they take out this high, I'm going to mail it in, because this is the kind of down move I'm looking for. NQ's turning green again on this bar. So I kind of want off of this area up here to see the sell, and we haven't seen it yet because NQ isn't participating. Even with the ADD cratering, I do believe they can still do this, but we don't trade against the trend. We don't trade against our rules. I was willing to give it a shot if I got the right level. This area was the right level, so if this fails and they go higher, then that'll be it for the day, guys. Unfortunately, a slow, short video today. Trend days, that's just what they are. You just don't trade them. They're going to be choppy. But if they come up here short and then turn down and give us a sell, then yeah, we can try that, because then what you have is you have moving back through the target. You have a failed move back up, and then they moved back through the target area. That's going to show you that they're very likely to take out whatever low they made here, if that's the low. So we'll have to see again how it plays out. We have some 10 a.m. news. We'll see how that plays. That'll be interesting, because this is an area that should provide some rejection. So I could see the 10 a.m. news doing something like this. I still think we're going higher eventually, but so we'll see. Let's see if we get NASDAQ starting to turn a little bit red here. Let's see if we can get a sell signal. We'll try one time, and that'll be that. The biggest thing, though, is options prices are virtually nothing. I mean, at the money, just one strike out of the money is 70 cents. They're usually $1 to $1.25 on a normal day. So volatility is extraordinarily low, which tells me that the bulls have bias in the market maker minds, because they're pricing things so cheaply. Let's see what news you're talking about, Will. Let's pull up the economic calendar real quick. So on the SPY, they did hit their magic level of 693. They rejected that cleanly. So we'll see if they take that out, then they're probably on their way to the next level up, which is all the way at 695. There's not a lot between 93 and 95 because that's going to squeeze out 7,000. And if they cleanly break 7,000, then they're likely to see a squeeze. Let's see, today is Wednesday. At 10, you have ISM Services Index, job openings, U.S. factory orders. Wow, you got 3 things. So we could see some volatility, I guess. They're not pricing any in, though, so I would say any volatility is going to get bought, so you want to be taking key support levels as profit once you get past your 20% win. So keep those things in mind. This is, of course, if we get a sell signal. We're not there yet. But you always want to think about the type of trade you're getting. We're in an uptrend that's been going since the first of the week. So that means dips are getting bought and nothing is really getting any legs to the downside. So when you do have that, you'll want to be a little more cautious in your counter trend trading and take, let's say normally I would take, or I would try to this is a key level here at 691.72 that I think they could break and come down to this level. And normally I'd probably let them do that, but because of the strength of the bull, I would probably take some profit here in this type of situation. You always kind of want to know the context of the market. And right now that this is a fairly strong bull squeeze for the last 2 days, and they're squeezing higher again today. Not terribly. I mean, they're up 5 points. It's not like they're breaking the market or anything, but you're still in a bullish context overall. So when you're short a bullish context, you don't want to overstay your welcome is the best way to put it. You want to take your profit and move on. I'm still on that 692 strike. I'll stay there. If it's going to fail, it's going to fail well below that. We'll get a cheap price on it, and that way if we do run into trouble, then the loss will be a little cheaper, most likely. We do need the sell to come in pretty soon here, though, because the ES has been in a sell and the SPY has been in a sell for a couple bars now. And if you look at your settings, your max between 2 candles coinciding. So the ES and the NQ and the SPY all have to coincide and say we're all trading together in the same direction for a trade to happen. So there is that factor that must be met. Well, that has to happen within 2 5-minute bars, and right now we're kind of at that area. So we'll see if we get one on the next bar here or on this bar as we get closer to this news. We'll see if the ADD is now negative 271 after opening positive 600 plus. So interesting. Here we got 15 seconds. Let's see if they can give the setup for the down here. We just need the NQ to blink for us. All right, there it is. Got 79 cents. My stop is going to be 630, 80. And we're already going to take profit here. We're going to close half for $1. That was faster than I could even get in, guys. Not get in, but get my stop in. So I'm closing half for $1 here. Actually, I got 99 cents, sorry. Thought I got $1. Closed half for 99 cents. We're going to move our stop to 79. That was quick. That was quick. Okay, here we are on the downside. They were setting up for the sell. They got the sell. Now, down in this area, we'll look to see where we're at as far as, we took $1. So if we're at $1.05, I'm probably not going to take it here. I'm going to look for them to try to get down into here and see what happens. We'll just have to see what we get when we get down there. Remember, we are running the special you see on the screen. Check the description for a link to a great deal on the indicator. All right, they're pushing down pretty decently here. So we were looking for rejection up here. We got it. These Mentor Q levels are incredible. There's a link for those as well. I can get you a 20% discount. Full disclosure, I get a kickback from them, but I love the tool. I only recommend 2 things. I don't sell things for the hell of it. I recommend Mentor Q and TradingView because I love them and I use them. That's it. So Mentor Q, guys, if you want to check that out, there's a link of that. Right here, support. They're coming right into it. We'll see if they can get through it. It's the after hours low, but not the pre-market low. Remember, the pre-market low is down here. But that is kind of the bottom of this range. And right now you're getting a failed breakout to the upside, especially if they retake 691.72 here. We would look for them to, at a minimum, come down to this area, but I would think 691 would be a pretty good target. 691 has a lot of support down here. And this is why you take the sell as soon as you see it, because if you took the sell after this bar closed, I mean, we got that up here. If you took this after that bar closed, you would have missed the whole move. Well, maybe not the whole move. I don't know how big the move is going to be. You would have missed a win already on the trade. That's what I was trying to get at. Okay, they broke through this pretty easily, so I'll probably take some down at 691.41. Assuming they can get there and they don't just spike and reverse this. If they spike and reverse this, we could see them squeeze it back up. But if they can continue to press 691.40, 41 area would be next. Jacob, when referring to the call, which option dates influence it? Is it the closest month expiry or a combination of multiple expirations? I'm not sure what you mean exactly, George. When referring to the call, which option dates influence it? If you're talking about like a call option or a put option, I always use 0 DTEs on day trading. So that means today's date, the 7th, they expire. Sorry, I'm just watching the market here. So I always choose today's date, and then the strike price, I usually take 1 out of the money. Sometimes I take 1 in the money if they're cheap enough. Today I probably could have done that, but I didn't. So, the call wall. I got you. So the call wall, these are determined by option levels. The 0 DTEs are for today, and these call resistance up here. That's a longer term, like weekly call option or monthly call option. Okay, not a bad close. They closed at support, so they spiked it and closed it. Now they need to reclaim it here and come down into the 40 area, and then we'll look for some profit there. So we're gonna let's see, we're at 109, so that's not enough for that. So we're gonna go to stops. Nope. Close. Another 1/2 of remaining for. We don't know yet. Well. So it's not a great sign for the bears. They're going to want to see it reject pretty good here. But what you've seen is you saw a break of the level and now a reclaim of the level. Now, if they back test the level, which they did, and then go back up, that is a opportunity for the bulls to potentially squeeze. Now, they need to hold this for a while. So 1 bar, they got to close up here. But this is not a great sign. So what you're seeing is you saw them make a low to start the day. They went up and made their high, and then they came back down, and the selling off of this high was enough to create a lower low and sweep this level. And then they reclaimed it, back tested it, and now they're going to look to squeeze higher, I think. So this is one of those traps that I talk about all the time. So they trap the late shorts. So the late shorts are looking for this to break, and they enter because they want to see follow through, and then they trap them like this. So this looks like a, well, we held on so far. Let's see if they get us out here. VWAP's got a hold in the 8. If that's their, that's the bear's hope. There's good resistance here from the pre-market, as well as VWAP in the 8. So if they break through this, then we're likely squeezing back up. But if they don't, they can fail this. But right now, the bulls are, even though they got a big sell bar, the bulls are trying to show that they want to hold this level and get out of here. Uh, 79 cents, Otis. It's always posted in the room, which I think you're a member of. I could be wrong. $82, not bad, Will. You should have had a winner there. You should have been able to take some profit there at the top and then, or at the bottom, I should say. Top of price, I meant. And then, if you got stopped out, you should probably got a 10% winner out of that. Didn't quite get to 79. They hit 82. I see why you got stopped out. You moved your stop to break even on the second half. Good job. I do have a slight advantage just because I see back end and I can see it start to formulate, so I can click my mouse maybe a split second faster. I mean, we're talking a split second. So in this case, that was 3 cents. All right, they did reject VWAP. Let's see if we can make another low here and push. Bulls tried to squeeze them out of there and so far have failed. But if they can't break back below this low, then the bulls will eventually squeeze this out of here. Back up to test this resistance wall. Bears really want to turn this candle red. Preferably get back below or to or below this low. If they don't, they're in a little bit of trouble. Yeah, that's a more bullish look currently. Even though we got this big nasty sell candle, you did sweep this low, and then you back tested, and then went back to this level. So these next two bars will be important. They took it back up to the resistance, and if the bulls can push one more bar above, then we would squeeze out of here. And holding this this low is the key to that. So if they don't hold that low, then we're very likely coming down into the 40s. Coming into this key support, we'll see if they're able to drop below it. Any reversal of this candle now that we're on, whether it's on the next candle or the current candle, would be a very, very bad sign for the bears. That would tell me that we're very likely coming back up here. If they can break below, then continuation is the play. Transports and banks are red, as well as IWM, so those are all good signs for the bears. In contextual view, the ADD is negative 600, another good sign for the bears. Meta is very red, rejecting the level we've been talking about in Meta. Netflix is now red. They were pretty solidly green earlier. So a lot of supporting evidence for the bears. Let's see if they have any follow through whatsoever. If they don't, it's really weak. Whereas next profit take for me is 691.40, roughly. I don't always wait till the exact number because very often they hit that number in reverse strongly and you don't get out. So probably like 35 or so, or 45 or so, wrong direction. But that should be about, $1.30 or something, which would be a pretty good take for the second half half of what we have remaining. So we take a whole first half, and then we take off a quarter, and then we take off an eighth and a 16th until we run out of things to take off. Stop loss still 79. Yeah, it'll be 79 for a while until they get to 130. Actually, 140. NQ green on this candle, it is. And NQ is actually back in a buy. So they got to stop on the NQ. Another bullish signal. And then this overall setup just looks trappy to me. So they swept this low to trap the shorts. Then they stopped out all the shorts with this, except us. We didn't get stopped out. They stopped out some of the shorts with that. Got late bulls involved. Then they came down and trapped the bulls. And now let's see if the real move is going to happen, whichever way it is. They're either going to break this low and continue, or they're going to squeeze. It looks like they're edging toward breaking that low. Or at least they were trying to edge toward that low. You can tell that that low is someplace that they want to defend, at least in the short term. All right, there's the break. So 691.40 is what we're looking for. Actually about 45, but we're looking for 40 as the target. Let's close another half for 125. We are at that support now. They spiked it. We'll see if they reverse off of that. How did I establish 691.45? Well, your first level was here. I said this, they had to break this. You could see they cared about it. They swept it, got right back above it, tagged it, got right back above it, and then finally broke through. And then your next level down was right here. There's pretty good support right here. At 691.40 basically. And so I said 691.45 was close enough to that so that we didn't get one of those moves like where it does that and then skyrockets and we never get to get out. So we take it a little bit before our target so that we don't get reversed out of our position and miss. So I just gave about a nickel higher, which gave us, I was looking for around $1.30 and we got $1.25. So, for what we're doing, that's 5/7, which is what, like, I don't know, 65% or something. Is that right? Maybe a little better than that. It's actually closer to 80%. Next level is going to be 691. This is a big level. We'll take, 691. So we'll see where we're at there. May take a little more off. We move our stops up to 89 now. Actually, just move them to 90. Move your stops to 90. I like round numbers. What you're seeing now is just a retrace of the range because they failed a breakout. So they went to breakout, they failed, so you're going to retrace to the bottom of the range, which is 691. And then we'll see how they react there. They can break through that. Back down towards 690 would be next. There's another put support level there. So you're seeing a lot of stacked puts and calls in this zone. This will be big support. So 92 to 93 was big resistance. We got to the top of it and failed. 91 to 90 is big support. We'll see if they get to the bottom of it. The pre-market low hit 690 exactly. 691 was the kind of low that they fashioned after. So they opened up here, way up here, and went all the way down to 91, then came back up, and this 690 level is where they kind of stuck after that. Hi, I'm not getting the same signals as you. Is there something wrong with my settings, or do I have the wrong chart? It could be settings. Biggest thing is, do you have real-time data for the ES and the NQ? You must have that. You have to have overnight trading turned on. So you should have this yellow and blue, whatever colors you have it as, it doesn't matter. To do that, you can come down here in the right corner and hit settings and hit session, extended trading hours. You must have, if there's over here on the right, you see where I have all my stuff. If it says ES1 and there's a little D next to it. So if you go down to, if I go down to this EK Wax right here, you can see a few of them have it. Where'd it go? Too far. So IBOV right here has that little orange D next to it. It means they're delayed by 15 minutes. If you have a delay, you won't get the proper signals. If you don't have B adjust on, you won't get the proper signals. So make sure you have all your setups right. B adjust is on the chart down here. So you want to use it on your futures charts. And it adjusts the chart for contract changes. All of those things could be possible. You want to make sure that in your settings, you have ES1 exclamation point, the CME mini, and NQ1 exclamation point with a thing of 2, maximum candles of 2. All of those things have to be set properly. Because NQ is late to get into the sell, I guess we won't get a buy if market pivots near the overnight low. No, you won't. NQ is not in that area. Back through 691.80 will be a problem for actually we'll give them up to 691.90, but the 691.80 area to 90 is the zone. If they get back through that, they're coming back up to 692.30, and then if they can get through that, back to the highs. So I talked about this yesterday. The market gives you the answers if you're paying attention. So let's move this back over a little so we can see it. Let me make the screen bigger while we're waiting to see if they stop us out or not here. So the market gives you the answers. Overnight, they came up to this area here. This was the pre-market high, 692.30, right? The 692.30 level rejected. Not a lot, but it rejected. They came back up. They failed it again. They made another lower low. Okay. And then they got back above it, which squeezed them up to the next level. When they got above that level, they came back down and they broke right back through that level. They made a lower low, and then the dead cat bounce off the lower low of the regular trading hours tells you the level. And they told you in the pre-market the level. 692.30. Right? They rejected that and made now a new low. So now, because this level has rejected here and made a lower low to where it was, and then rejected and made here and made a lower low, they're telling you supply is the place at 692.30. So this is your supply. If they get back above that, then the supply has run out and we're going back to here and see what happens then. Right here, they're telling you there's supply here, right? They made a low, there's supply here because they made a bounce and then made a lower low. So your next level is actually here and then the high. But this is the level. The market gave you the answer once it broke and made a lower low. So it made a low, right? Told you this was a valuable place. Then it broke that low, and on the dead cat, it came back to 69.30 and broke this low. So that tells you that there was enough supply here to break the prior low. That means the bulls have to get back above that 692.30 to start being bullish again. If they reject there again, we could see we'll see a rejection. But this is the level for the squeeze to happen, because that's where the shorts are sitting. When the shorts run out, the bulls will squeeze, and that's the way it works. That's how the market works over and over. It's a series of traps. It's a series of levels created by the market, told to you in real time if you're looking for the levels. Too bad I wasn't fast enough to get this last sell. So here's, you should have your trade up and not just ready, but like if current price on the trade is 79 cents, my limit is going to be like 87 cents or 89 cents or something like that. I have depending on how fast I think the market can move on this one, I had about an 8 cent, I think it was 8 cents on my limit. So that when I see the sell signal coming and I hit my thing, it has to move 8 cents away from price for me to get rejected. That's a huge move in a split second. So if it's moving that fast, so be it. But, I think when I hit the thing, if I was looking at the screen, it was like at 76 cents. And my actual price I got was 79 cents. So you have to be, you have to have your limit set wide. You don't want to use market because market will be too wide. They'll give you any random order that comes through, that you might get 84 cents somehow because an order comes through that you get matched up with that's stink bidding 84 cents or whatever. So you got to be careful and not use market, but you have to have your limit wide enough to get you into the trade when the market's moving quick, especially on the sell side. The sell side moves very quick. All right, we're still hanging around here. They're trying to push down and make another new low. They haven't gotten back above any of the key levels, so the bears are still controlling the market. I always do. I was switching the strike and went down. Oh, yeah. If you're switching something around, then yeah, you just get left behind at those points. I've been there. Those are always annoying. So anytime the market is moving up or down, you can do it in both directions. Anytime that they make a low and then come back up and then make a lower low wherever they came back up to. So in this case, here they made a low. It's because here was our first low of the day. They made a low here, right? Wherever they come back up to and die, if they come back down and break this low, okay, that tells you that this level right here is extremely important. It happened to be the after hours high. It was yesterday's high. They're telling you that this level is what they're trying to hold, the bears. If they can't hold that level, then we're going back and squeezing. So anytime you see the market make a low, dead cat, and then break that low, wherever they dead catted to, that's your zone. That is your place of interest. Now you're not going to get a long here, but they're going to go ahead and rip this higher. Actually, we just got stopped out at 90. So we got stopped out there. Let me pull up the thing. 1 second. My computer's always very slow. Dang it. Hold on. I keep getting the wrong thing here. Give me 1 second. Okay, sorry. There we go. Average exit of 103. So 23-cent gain. About a 33% winner on that one. Not bad. Maybe a 29% winner. Sorry, or 28. Close. Try doing it on a phone. Yeah, phones are hard, man. I hate trading on a phone. I do. If I'm working off my cell phone, I'm probably not trading, honestly. One, because generally you're in a distracted environment. If you're on your phone, you don't have a place to sit down and trade at a desk, you're likely in a distracting environment that's going to make it harder to trade anyway, where people can come up to you and ask you questions or other stuff's going on. And then two, trying to get stuff through on your phone is super duper annoying. Yeah, I went super duper on you. Okay, so can anybody tell me what the next key level, if they make a low here, if they come down and break this low and get to the 691 zone or even down to 690, what's the level that matters? It's an important concept to understand. If you do, you will do so much better trading. You will be a better trader overall. 681.92. Let's see. Is that what it is? High. 691.93 is the answer. 691.93. If they make a new low here. Why? Remember the concept. You have to remember the concepts, guys. They're important. We made a low right here, right? Then we went up. They came back down off of this level, actually technically off of this level, and made a new low. Then they bounced. That makes this level right here super important. However, this level produced a new low. Because this level produced a new low. That level is important. Now, they bounced up to here, If they would have made a new low, then that level becomes super important. They're telling you that this is now a supply level. Now they're back through it, so it's not a supply level. And this is starting to look like a failed breakdown. And we're going to squeeze back up to here. And then we'll see what happens when we get to that super important level. Okay. So, secondary concept. We've made a low. What low did we break? We broke this low. Okay, great. We got up to that low. We rejected that low. And then we got back through that low. That's an entry, right? These are trading concepts. It would have been a long on ES. Ahead NASDAQ followed through. ES has a long right here. The indicator sees it and has it. Okay. Now they're heading back to this level and it's a squeeze. So this is what happens. You made a low. Technically the low was here, but they back tested the level we broke, couldn't break down, and then got back through that level that tells you that this level was not strong enough to produce a new low. Okay. Means price wants to be above or at that level. Now they're coming back up again. Like I said, they should test 692.38 or whatever, 692.30, excuse me, whatever the high is here, 692.29. So 692.30. This is the level they told you was important. And now you're coming back up into that level. If they get through that level, we're coming back up to this level, 692.77. So you see all the selling bars here on NQ or on ES that made lower lows. NQ never made these lower lows. So this was the low on NQ and then they never got past it. Here's our return to 692.20 or 692.29. They're within 9 cents of it right now. There it is, tagged. So now it's going to see what happens here. If they shoot through it and retrace, then it's going to, we can see a pullback. But getting through this directly, you still want to see them kind of do this to be bullish. But they got through that key level. So then it's, we want to see them kind of accept that level where they back test and go. But this is the next level higher, 692.78, assuming we accept this level. Now you could actually make a case for here because this is the open of that bar. And that's kind of where they sold from. They spiked it and then sold. So your resistance zone is going to be this. And then it's the high of the day. So hopefully, not only did we make some money today, right? Hopefully, not only did you make some money on these couple of trades, we were break even on the first one and 24 cents on the second one, which at 50 contracts is $2,000. So that's a good day. You're learning something as well. We're not just trading here. I'm not just showing you an indicator and saying here's how it works, which is a good thing. I'm also showing you how trading works, how price action works, and why and how the news doesn't matter. Price does what price is going to do, and it tells you each time what it's going to do. It gives you the answers. It's an open book test if you're able to find the answers. They're on the chart. Does that mean that it's going to do that 100% of the time and you should get all your money? And of course, it doesn't mean that. It means that that is a high probability play and one that the indicator looks for and one that you should be looking for if you don't want the indicator. You want to learn trading and price action. So Um, they're coming back up into this secondary resistance. They got down, within, let's see, 53, 60. They're within about a point of it, 692. Yeah, so they still got about a point to go. You want to see them hold this line here. So this is the important line, 692.30. Hold, of course, doesn't mean they have to stay above that. They can come back down on the next bar and then get back above it, stuff like that. But you want to see them hold this general area. You don't want to see them start doing this. Why don't we see a buy signal or sell stop? You do see a buy signal if you change the settings. Remember, all three have to be in line. And right now, NQ is not in line. I just went over that. So if I change this to ES, you have a buy signal. And that's even late. ES actually had the buy signal on this bar. Oh, dang. Look at that. There's your tweet. So this is a sweep low here. Let's see what happens next. They made a new low off of this area, so now we have a new zone to watch. Oh, I don't even have the right ES on here. That's why. That's the one we should have. Yeah, so the buy signal was down here, or coming up off of here, because why? They got through, they back tested, they got through. You got the run all the way up there. You would have had a winning trade, and then whatever this was. But this was a sweep low. So then they're taking it back above. I am sure this was a tweet, right? We tweeted about something. This is not a legitimate buy, by the way. I got to change the settings back. But you can see that the ES did have a buy signal, but NQ never got into a sell cycle. So you got to remember, NQ has to follow along. So this is what I would call an ants marching event, right? So I don't know. Did we have a tweet? Does anybody know? I'm guessing we have a Trump tweet or something. Let's see. Trump tweet. See if anything comes up. I don't know. I don't see anything, but I'm sure it was some silly thing. The point is, whatever caused this rapid reaction here is called an ants marching event in my eyes. In other words, if you have a line of ants going across the screen here and there's a sugar packet right here, right? And they're coming here and you just got ants everywhere. If you put a stick in this line, the ants are going to go crazy for about 60 seconds, maybe a couple minutes till they figure out what's going on. They're going to be all over the place, scattered for one, fear, two, safety, and three, trying to understand how to get out of the danger they're in. Then they'll organize, answer incredible problem solvers, and they'll get back and they'll figure out they can either go around the stick or over the stick and still get to the sugar packet. So they were always going to the sugar packet. They were never going to stop going to the sugar packet. They just had to figure out what kind of chaos was happening right here and then regroup and then start their mission back to the sugar packet, right? So that's what an ants marching event is. The market does something chaotic and then starts back in the right to whatever it was going to do. NATO tweet. Thank you, Miss Ice LLC. Welcome to the stream. Brian Dania, a Russian oil ship was taken by the U.S. Oh boy, that could be an act of war. But war gets bought very often, just so you know. Interesting, a Russia ship taken by the U.S. China government asked tech firms to halt NVIDIA chip orders. Yeah, that's just, I don't care about those news events, honestly. Those are, again, they're catalysts. They can make the market move, but they're not important to the overall market. Did NVIDIA take a slide? No, NVIDIA's still green. So China told them to halt chip making and plow on. NVIDIA, they're still green. I mean, I don't know what they're diving from. Okay, well, they were up 4 points, so they're back to support. I wouldn't call this diving. If they were down below this stuff, then I'd say, all right, well, that's a nice reversal on the day. This to me is just back testing a breakout. So we have a breakout zone right here. They broke out of that zone here with no back test, right? Now they're coming back. They back tested it, and we'll see if they do that. If they don't, they don't. It's, like I said, it's not a big deal either way. Just in general, the news is noise, and you can pretty much ignore it. I can tell you right now, I don't look at a newspaper. I don't watch CNBC. I do sometimes just because I want to see what they're saying, because sometimes it makes me laugh. Sometimes it's ridiculous. Especially when I watch it, is when we're looking for the market to move to 7,000, let's say, and CPI is coming out, and they're at 6,900, and CPI is absolutely brutal. Let's say it's the worst CPI ever, and the market goes to 7,000, like price action said it would. I love to turn on CNBC to see what they're coming up with then, and see how they spin that into how the highest inflation in 7 decades is good news. Somehow. Because it's not good news. It's just something that came out. It's just news. And the market is already in a mode of what it's doing. The quicker you can disconnect from the news, the better you will be. I don't watch press conferences. I don't listen to the Fed. I don't care what they're going to do. It doesn't matter. It is an irrelevant, completely irrelevant thing as our earnings. Now, let me be clear about one thing. Earnings and fundamentals are important for buy and hold traders. Markets are going to correct. Markets are going to do a lot of different things. You want companies that are real. The dot-com bubble had a bunch of companies with no fundamentals, and that's why when things went bad, they went under. That's important to understand. Only the best companies survive the biggest problems. And so if you're in a buy and hold state, I get that. That's a fair analysis to want to make sure the companies matter. But the S&P is 500 companies, and it's a conglomerate of them. And it's going to do what it's going to do. It's not based on any one thing. And when I say it's going to do what it's going to do, what I mean by that is price tells you what it's going to do. It gives you the answers. You just have to figure them out. And until levels break, the market doesn't break. And it's repeatable information that you can see over and over again. You can see when the market breaks, what happens. That's why if then is so important in trading. I tell guys, my people in my room all the time, and people on my social media videos get so mad because I'm like, if this, then that. And then all the comments are if. Yeah, genius. It's because that's how trading works, and that's how professional trading works. Because if they hold here, and this is not, I'm just giving you an example. If they hold here, then they will come up to here. Okay, cool. That means when I start to see them come up here, I can enter a trade with a very short stop and a very long win. And if they hold here, then this. I expect this to play out way more than not. Now, if they break here, then this. So what does that mean? That means when my trade from down here gets here, I take profit because there's an if there. If they break here. If they break here, then this. So I take some off here and see what happens. If they stop me out, okay, I still win. If they keep going, I have a runner. I still win. Okay? So that's why if then is so important. If they break this, then this happens. That's it. That's all the market is. And if you understand how to see what those if thens are, you'll be a great trader. And then trade them emotionless. You'll be a great trader. So I will always talk in if thens because that's how great traders understand when to take profits. Because you don't know where the market's going to reverse. It can reverse off of several key levels. It can reverse much higher, much lower. And if you aren't on that train, you aren't going to make any of that money. And if you're prejudging it and you don't take any profit at those levels, then if it does reverse, you get killed. So you have to understand how to manage risk, how to protect your capital, and how to take profit. It's a very, very essential part of trading. And again, trade less and you'll make more. Find a trade that you understand. All the patterns happen over and over again. Find one that you master and just wait for it and then trade it. Now, because I built the indicator, I don't have to do all that work. I've done it in my life. I've done almost every trading thing you can do. That's probably a lie. I don't know how many are out there. I've done a lot of trading strategies and learned a lot of trading strategies, and I used the ones I like, and those were programmed into my indicator. But I don't try to do everything because it's impossible. I don't try to trade every move because it's impossible, and you can't. You'll lose money. Trade less, make more. Get one thing that you're very, 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 very good at, and you won't believe the amount of money you can make. Are we looking for a buy or sell? Right now, we're still in mismatch territory. So what happened was, here, let me see if I can get two charts up. Let me see how that looks. We wanted this one here to be the NQ. Okay, that's the DXY. I misclicked there. I don't know what happened. NQ. So you can see here, let's see, what bar is this? Yeah, nope, here. Yeah, so here, the NQ only had one red bar, and then it had two green bars following, whereas the ES and SPY had this big red bar that followed through to the lows, and then a slightly green bar, and then two more red bars that followed through way lower and made a new low. NQ didn't have that. It made its low and then went up. So it never completed this selling cycle. So we're still in a buy on the NASDAQ. The ES is in a failed selling cycle right now, which produces a buy signal. So the sell cycle completed, and then it started to fail, and you get a buy signal. So it's in a buy. It's got a buy signal on it. It doesn't click because NQ isn't in it, or was already in it too soon, and it's trying to get into a true buying cycle. Right now, it is showing a failed sell cycle and trying to complete through that. Nonetheless, those produce a lot of winning trades even when they don't complete, and when they do complete, they're usually pretty darn impressive. So, we talked about NASDAQ needing to lead 2-3 to 1. Right now, they're leading 5 to 1 today. It's not a huge day for the NASDAQ, but it's a nothing day. So the NASDAQ is gaining 100 points without the ES moving. And I feel like you could see, if the NASDAQ is going to go try to make new all-time highs, I feel like you could see a few days of this where the NASDAQ kind of outperforms by a big number, where it tries to catch up on the charts. We talked earlier today about how it's lagging on the charts. So we'll see how that goes here the rest of the day. But they are back above that 30 number, 692.30, and they slightly rejected this high, so they came right back into it and gave a slight rejection so far. We'll see if they get any more, but remember, this is where they went to before they spiked to a new low. So there was supply here originally, and now if they get back through that, we're going into 92.81 and then 93.09. And this is the same on big charts too. So this is the 5-minute chart, so you're getting a lot of smaller moves. This is 92.50 to 92.77. So it's only a 20-cent move between these two levels. But you're on the 5-minute chart, and these are kind of a clustered resistance zone. You'll get that sometimes, and then you get bigger open moves. But on the, like, say, the hourly chart or something, you can see bigger moves. You'll see bigger failed breakouts or breakdowns where they set the low or the high, and then they set the dead cat bounce or the quick dip that they're going to buy. They set those levels, so you know what's important to the bulls and bears as we progress forward. NASDAQ still ripping nicely here. ES still stalling at that level from before. But NASDAQ has taken back that level. So they came up, failed it, and then took it back. So that's bullish on the NASDAQ, which ultimately should be bullish on the ES. And again, ants marching, guys. The market was already going higher on NVIDIA, and they came back down and back tested their breakout. And now they're back to trying to push higher again. Now, can they fail and make a lower high here? Of course they can. But as long as this support holds down here, this is still a bullish structure. SPY, as I said, ants marching. You got a chaotic event, and then they're going to march back up to the target we had, which was 692.78. Now, the problem if you're trading is the chaotic event sucks because it stops you out and makes you restart, but it is what it is. The market was going to do what the market was already going to do. Financials holding this thing back. Where are they at? Yeah, they're down 1.3%, but they've been ripping, and they don't control the ES and the NQ as much, but they are not supportive of this rally. Neither are the transports. The transports are not on board with this rally. So you're seeing what I would call a weaker rally. You're negative 750 on the ADD, even though you're green on both the major indexes. The Dow is not green. It's down a little bit, but I don't track the Dow as much. I have it on here because people do, but I don't. I wouldn't be shocked for today, just looking at the ADD, the Dow Jones transports, the banks, all that kind of stuff, RTY. I wouldn't be shocked because they got up to, I think the high was 69.97, 69.98. I wouldn't be shocked to see them spike the high into 7,000 today and then reject. It would essentially be a fake out, like a trap. So they come up here, they trapped everybody who wanted to get to 7,000. Then they get to 7,000. Everybody thinks it's going to blow through, and then they reject. I wouldn't be shocked to see that today, given the underlying information. But that should be a major zone for the bears to want to hold on the ES. This was an all-time high on the ES today. So they finally took back that high from a while ago. And you can see on the ES, they are basically back at the zone. So on the SPY, they weren't quite as close, but on the ES, they're a couple ticks away from the top of this candle, which is a major breakdown zone. So they've, in my eyes, they've fulfilled their target. They generally will tag it, but let's see, that's 69.92.50, and this is 69.93. Yeah, so they were 2 ticks away from it. 69.92.50. This is why you want to take your profit a little bit before they get to your line, so that one, if they don't get to the line, you still get profit, and two, if they reverse it really hard, you still get profit. I'll leave my computer. That'll get this market moving. Yeah. Those things are fun. A week or two ago, or before Christmas, I went to the bathroom and I tried to hold it as long as I could, and it looked like the market was going to be dull for a minute. And as soon as I went to the bathroom, it initiated the biggest trade of the day, and it was a big one. It was like a 5-point move on the SPY, which is big. And I missed it, so that was fun. That was neat. It's a trap. Let's see, they're a quarter away from it now. Well, 50 cents on price, but they got to within a quarter. There they go. Let's see if they can tag it. There it is. 69.93 is tagged. That was the top of this breakdown candle. So when a candle breaks down like this, it tells you a lot of supply is on this candle. Now, whether the supply was up here at the top or at the top of the candle, to be determined. That's why we have a zone. So you can see we have the two lines. This is our zone right here. They've hit the bottom of the zone, so we could absolutely see rejection here. They could hit the top of the zone and see rejection, or because we got really close right here within a point and then they rejected, more likely they're going to come up and test this level, I think. Remember, I said earlier on, when they get close to a level and fail it, that means this isn't the target. Up here, when they got to 69.98 to 25, 7,000 is not where they're headed then. They're going to be looking for beyond that. And that doesn't mean they do it today or even tomorrow. They can consolidate down here and then go up. They can stay down here for a few days. But I would look for them to be pushing toward that 7,040 to 7,100 zone. STEX up 9% today. I don't know what that is. What's STEX? StreamX Corp. I don't know who they are, but good for them. They have earnings or something. All right, there they are through the bottom of that resistance. We'll see what they do up here at 69.95 essentially. That'll be a key zone, 69.94.5 here. They had some issues there, obviously. That's where they rejected from. Off the retrace, remember that? So initial rejection, retrace, bounce, right? Your dead cat. So this area here becomes important, and then they make the new low. Given the call resistance at 7,000, I think that that's probably our next target, and then rejection. They'll grind through this zone, and then we'll see if they can give us a rejection, maybe back towards that 69.80 level. If they do that, then we would look for some kind of lower low sweep, and then a level for the bulls to have to reclaim to figure it out. But overall, that 7,000 level should be important. They might spike through it since they got so close, but I think ultimately, like I said, 70.40, 70.100 where we're headed in the bigger picture. or short middle term picture. We do have ES moving into a buy here almost. There maybe one more candle. This one's got 2 minutes. Maybe this candle, depending on how it does. If it closes up strongly, there's your sell stop. Okay, so it's moving into a buy on the ES and SPY. So we could see a sell if this candle closes, up where it is right now or near where it is right now. And again, this is this between 69.95 and 7,000s where you're looking for resistance to take effect and reject. You can see that it's rejecting this line here a little bit. Oh, man. Not getting to sleep in like I did on Christmas break. Getting up early stinks. So we're in the zone of resistance right here. Obviously, we're getting chopped. And if they break down below 90, 93, we could see them come back down a little bit here to 91.50, and then 89 would be the next two levels down. If they get through, obviously the high here and 7,000 are the next two levels. Sorry, guys. Had to run to the bathroom real quick. Nothing changed, so here we are. Seems like the market wants all the options to wither on the vine. Sometimes that's what they call max pain, where the most people are going to lose. But mostly the market makers just want to defend levels that matter, and this is what most days are. Even though we got trend day parameters, I understand most days are two-way trading, where you don't have just you don't have a consistent up or down the entire day move. And even most trend days will have a bounce or a dive in them that's probably tradable, but you'll spend so many times chasing that it may take 4 sell signals before you see the dip, or 4 buy signals before you see the bounce. You don't want to chase all that, so you just stay away from it. Today we did take the sell because of extenuating circumstances. It was a rule breaker. That's my fault. It was a winner, but it was a rule breaker. But we had our supporting evidence, the RTY being red, the Dow Jones being red, transports being red, the XLF being red, the ADD being very red, led us to believe that a decent sell was coming, and we got a 20-point sell, which is good, or 2-point SPY sell. So sometimes you break the rules, although you should really never break the rules. I'm a hypocrite, I know. But I don't do it very often. The people in my room will tell you that we get a trend day and you don't hear from me again except for updates. You don't hear from me on trades again. You hear from me on updates for the rest of the day until we get to our call. So most of the time, I'd say 95 to 98% of the time, I follow the rules. And then because I've been a professional trader for 20 years, I do take some stabs at things that I think make sense. My config should be normal. It should be whatever the I think, unless I change something. ESNQ2, yeah. It's the same. So we came right back to the resistance lines. We rejected the top part. We do have a potential for a sell here. I will likely take it. Well, I will take it. Not likely, I will take it. And we'll see what happens. It may be a fool's errand, because technically today should be no trading. I get it. I'd prefer to see it off of 7,000, honestly, but I don't know that we're going to get that. At least you're on the East Coast now. I wouldn't say the coast, but I am in the Eastern time zone now. I'd love to be on the coast. That'd be much better. So again, guys, this is the market giving you the playbook, right? We said this was going to be a key level. If they got through that, then this. They got to here. Now they're back testing this level, right? So we take some profit down here. And then if you wanted to take profit, it's a little bit close, so I probably wouldn't have taken profit here. But if we were in a trade, obviously we're not in a trade right now. But if we were in a trade getting up here, we would take some profit here. It's a key level. And then if they get through, then this. If they get through, then this. So you could have taken profit here. It's not much of a climb. Well, I guess maybe it is. It's more than I think it is. 692.53 to, oh yeah, it's $1.20. So yeah. Oh no, it's just 20. Excuse me. Just 20. Math's hard. I probably wouldn't have taken additional profit here because it's so small, but I'd be watching to see what happened here, knowing that this is a very key level. Now they're back testing, the 8 and this level and trying to bounce, and we'll see what happens. But the next thing is if they break this, then this. And then up here you can take some more profit because that's another 60 cents up, and that would be good on your trade. So the market hands you the levels. They just hand them right to you and says, please use them. And the market makers can't help it, but here's the problem. All of the things that they do are designed to, effectively brainwash you. I have a new book that I'm writing, and it's called A Decade of Market Secrets, and the first half of it is all about the brainwashing that occurs to every single trader that enters the market, and how the market makers, the algorithms, and the analysts all brainwash you into thinking a certain way so that the market can manipulate you. So when people say the market is rigged, I say, well, to a degree, you're right. It's rigged in the fact that if you don't know what you're doing and you just come in and watch CNBC and look at charts and study things, you are going to constantly be trying to understand what went wrong and why and how, because you had these great setups that got stopped out. And that's what they want. They want you to be confused. They want you to be emotional. They want you to chase. They want you to make bad decisions. And they don't do it through going, oh, Jake just entered at 6,900. Let's run down and get that stop. Well, the market would collapse under its own pettiness at that point. It couldn't do that. But what they do is they say, we are going to train traders where to put their stops, and then we know where to go get their stops. So we get to dictate to you how we're going to let you set up your trade based on the information we keep throwing at you and brainwashing you with and teaching you. And then we're going to set up trades that have you put your stop in at this level, and then we're going to go smack that stop. We know where the level is where the average retail trader is going to put his stop because we told you to put it there. And then we're going to go get that stop, and then we're going to go higher, where the pro traders have different stop levels. They understand different entries, first of all, different stop levels, and different ways of viewing how that works that doesn't allow the market to take advantage of your herd behavior. We are a herd. We are just like any other animal on the planet that herds. If you look at the animals in Africa, I talk about this all the time. The zebras and all those animals that get together, they all know when to go to the watering hole. They know they can look and say, hey, weather's getting bad, we better get safe. And safety is water at this point. Even though we got to trek across the hard lands of the lions and everything else, we got to go now. And the ones who go first are usually safe. The ones at the back of the pack who are wrong and don't go until the end are usually not as safe. So the leaders and the people in the middle, very safe. The followers, very susceptible to death. Most retail traders are the followers. They follow what's been told to them, and they follow the herd. And so all they've done as a market maker, as an algorithm, and as an analyst is force you into these beliefs that are so strong because they are like, it's like the belief that you have to work a 9-to-5 job to be successful, or you have to go to college to be successful. That's not true at all. I have zero college. Well, I have 3 years of drinking college, I'll tell you that. But I have zero college as far as credits and meaningful life. And I'm extremely successful. And my wife has zero college, and she's extremely successful. My mom had zero college, and she was extremely successful. She was a VP at Procter & Gamble. This idea that you have to do certain things is brainwashed into you, so you follow the system so they can control. I'm getting off on a little bit of a black box here, but with a conspiracy, but I think it's absolutely 100% true. They want control, and the way they control you is through the market. Financially, then through day trading, they control you through market moves. They control you through manipulation in the market, and they get you, and they tell you things on TV that they think you'll believe because you've been told, hey, it matters. Fundamentals matter. This matters. This matters. Earnings matter. All this stuff matters. Some of it does in certain context. Information is good, but how they frame it and how they give it to you is really confusing. And it's really confusing to hear we had the worst CPI number in 7 decades back in 2022 of October of 2022, and have them say, yeah, but that's good news. The market went up 150 points today. Why is that good news? It's the worst CPI we've had in 7 decades. It's never good news. But they're going to frame it that way because they want you to believe that what they say means something. And so you get this belief system of how things work. And until you can step outside the bubble of the belief system and look at it objectively, you're going to continue to get trapped and frustrated. Sorry, that was a rant there. I don't even know why I got on that rant. I just talk sometimes when I'm bored. And hopefully you guys got something out of that. Anyway. I think JP Morgan knows exactly where my stops are. Well, yeah. Jamie Dimon's a kind of a piece in my opinion, but he's a POS. But that's another story. Anybody that comes out and tells his employees you cannot even sniff Bitcoin or you'll be fired, and then 2 years later has his company buying up millions of dollars of Bitcoin is a piece of work. Because those people who could have bought Bitcoin 2 years earlier could have wealth and could be on their own doing their own thing. But they feared for their job, so they didn't. And that's manipulation at its finest. When the banking industry does fail, I hope more than anything JP Morgan is the biggest fish. We have a puppy. Her name's Penny. She came down the stairs to see me. I'll have another puppy in 4 weeks. His name will be Hercules, and he's a Mastiff. That's my trading dog. I lost my Roddy, so unfortunately I have to move on and get a new one. It's been long enough. Penny's my daughter's dog. She's a little kind of sheepdog terrier mix. She has needle teeth, I'll tell you that. All right, consolidation in the resistance zone here. Nothing happening. Without the bears being able to kind of break this low right here at 692.43, I'm looking at this likely consolidating in this zone and pushing up into the 7,000. They may even stab down a little, but I think if they can't, they got to break down below 692.43 and start some downside momentum if they're going to fail here. Otherwise, this is just consolidating near the highs of the day. Well, there they go. Ask and you shall receive, I suppose. All right. Still sitting on that 692. It doesn't cost anything right now. It's like 50 cents. But that is one strike out of the money. I guess we could go up to 693. It doesn't really matter if they do give us a sell here. I'd prefer they didn't. I would rather see them make this high first, if I'm being honest. I like low volatility, but this is ridiculous. Yeah, I mean, when options prices are this low, you can kind of expect this kind of market where sells aren't going to be long lived. That's why I said when we went down, we needed to take profit a little quicker than we normally would because the likelihood of follow through was low, and we're seeing that so far. There are days where you get a we've definitely done this in the room where we've gotten a 60-cent trade and turned it into $3 by the end because the move was so fierce to the downside or upside, whichever way it was. We've definitely done that before, but overall, low volatility days usually are like this: up to a level, down to a level, up to a level, down to nothing really happens overall. I mean, the market really hasn't moved at all. It's up 50 cents on the SPY and $3 on the ES. The only market moving a little bit is the Qs. The Nasdaq has entered a sell. ES is still waiting. Should be coming in here very soon. We'll see if they are able to break the 21 here. If it breaks the 21, then may see something. Then we'll have to see. Don't front run the signals, guys. They don't trigger for a reason. That means the criteria hasn't been met. And that's an important thing. Even if it's moving and it seems like it's moving a lot, it could be a very weak move. We saw right here. This move spiked all the way down and then all the way back. It's a weak move. So and then got bought. So just because it's moving fast doesn't mean it's a trade we should have taken. It's just a quick liquidity flush and go. So we'll see. If we get a sell, we'll take it. But if not, then I would expect them to bounce back to 7,000. The ADD is still at negative 720. I mean, it's certainly not a banner day for stocks today, but they're basically hovering around break even to slightly up, and then RTY is slightly down. Well, RTY is down a decent amount. Slow day, that's for sure. But a winning day, and green days are good days. Green days are good days. Remember that. You make 2,000 every day. That's 10K a week. That's pretty good. Looks like most of the move is over. I don't know if I'd say that. I mean, over here you got the same kind of sell, and they took it all the way down another 20 points or so. The ES is being stubborn, though. Even though we're getting decent selling, the volume is pretty weak on it, and the highs volume is pretty weak as well. So there's very likely a volume issue with why we're not getting the sell on ES. We'll see if it picks up here or changes, but there's some parameter not being met. That's for sure. What do you make a day on average? Well, let's see. Last year we made 83,000 or 85,000, excuse me. 85,000. If you assume there are 365 days minus 2 weekend days is 104 days, so that's 261 days minus roughly 10 holidays, I'm going to say. So let's call it 250 days of trading with vacations and everything else. So 85,000 divided by 250 is about $350 a day, roughly. That's an average, obviously. Oh, Matt Hope says there's 252 trading days a year. Given that I take probably, I don't know, 15 to 20 days off a year too, maybe more than that. So it could be slightly higher, but I would say in the 300s somewhere as an average. I was joking about making 2K every day. I mean, you can do that, but that's pretty hard to do unless you're trading bigger volumes. Oh, Matt, you were saying no. Anyway, I don't know. I'll trade it. Yeah, okay. So this is why the ES didn't trigger. It was weak, and the ES did not meet its requirements. So yeah, I mean they got. Could you have won this day trade if you got an entry up here? Yeah, but the entry didn't look right or wasn't set up configured right, and ultimately you would have got stopped out on this bounce most likely. So that's why ES didn't trigger. It saw it as weak, and that's the whole part of the indicator that people don't get. It's not just a metric where on the RSI, if it's above 70 or whatever number you decide, it's overbought and you should sell. If it's below this, it's oversold and you should buy. Whatever. That's a metric on the RSI indicators. On other indicators, it's moving averages crossing, and it's kind of one indication of something happening. It's not a conglomerate. What my indicator looks at is a lot, and volume has a big role in it. Key levels have a big role in it. Options have a big role in it. We're looking for sustained moves that are failing at very key levels on volume. That is, if you want to put it at the simplest terms, that's what you're looking for. It's a lot more than that in depth, but that's what it's looking for. And if it's not seeing everything, the criteria met, on top of that, it's looking for confluence between the NQ and the SPY, saying that all markets are being bought or sold. If it's not seeing that, then it's not going to give you the buy or sell, and that's going to keep you out of so much trouble that other indicators get you in these chops because one candle up, it does this, one candle down, it does that. That's what separates my indicator from others, is that one, it's forward looking, it knows where the levels are, it knows what it's looking for, it knows where the volume is. It's not waiting for something to happen in the past. So if you've got a moving average that needs to cross, that's something that's calculating past data. So past data has to change, meaning the trade might have been here, but because your indicator was calculating past data, it had to wait till here to see that the move was ready to go and the move's already up here. You missed all of this. Ours is working in real time. So they came back up, they bounced, right? And they came back up to our line here. These are why knowing your levels are important. They rejected that. We'll see if they've got a little gap they got to fill here, so they'll probably get there. There they go. We'll see if they're able to push through, but the reversal went to resistance and rejected. Is it worthwhile to trade this? I don't see much chance for a major winner. In theory, we shouldn't be trading at all, but because it's a live broadcast, and you guys are here, I'm trying to find some trades that work, and we did. We used this sell here, which was perfect off of the spike. But in theory, this is a trend day, which means that we would sit out most of it or the rest of it. And this is what you get on trend days. You get one of two things. You get, obviously, straight up or straight down, whatever the trend is, right? Or if the trend day goes up, they're going to do a lot of this kind of moving up, and it's hard to trade. And then you might get one flash down and then back up and continue the trend. Well, where this flash down happens, we happen to nail because it was the only sell signal we got. But a lot of times you'll get a sell here and a sell here and a sell here, and then finally this sell works. Well, you lost so much on these three sells that this was not worthwhile to sit there and try to wring your hands and trade all that crap. So that's why we stay away from trend days, because they tend to be bad trade setups all the way around, because you're stabbing more than you are calculating. And so technically I would say probably not a great time to trade given the low volume and the slow moving. But given the supporting data, all the red in the other markets and stuff, I was willing to take one. And since we won this short here, I was willing to take one more stab at it on a short, since they didn't follow through to the upside, if we get one. That's up to you guys if you want to trade it or not. Following the rules, no trades here. But like I said, since it's alive and you guys are here to learn, I figured we'd take one or two trades and see how they went. Since the first one won, we'll take one more, and that way we can go through some educational stuff as well as trading stuff. Looks like we're stuck in the range. Not for me. Will, you got to change that perspective. Ranges are exactly what you want. They're well defined. They're easy to trade off of. They stay in them for a long time, so you can trade off tops and bottoms. It's the trend at days that make it tougher. Now, if the range is really small, like this one isn't huge, it's a 2-point range, but it's not huge. If the range is really small, then yeah, it's not worth trading. And this one isn't what I would call huge, but it's since prices are so low, you do have a little bit of opportunity to make some money. I like doubles and triples. 20% no good. Well, you certainly can get those from time to time, but I will tell you that the most successful traders in the world, unless they're swing trading, are not day trading for doubles and triples. Those are hard to come by. Because it's a double-edged sword of you either have to get a huge run and manage your risk, or you have to let your whole entry run to get to a double, because double. So if you get in at 70 cents and you gradually take profit off the board, it's hard to get that full 70 cents over the profit. But you might win 60%. So trading for those is really hard because you're going to stop out way more than you're going to win. And yeah, it's just a tough way to go. I don't trade that much. A bunch of small wins don't help me. Well, that's relative, because at 50 contracts, 14 cents a day is 100K a year. So 14 cents a day is a pretty small win. Let me verify that math. I think that's right. It's either 14 or 16. Actually, no, it's less than that. That's on 25 contracts. It's 8 cents, I believe. 0.08 times 5,000. Yeah. If you're trading, if you win 8 cents a day on 50 contracts, that's $100 grand a year. There is a idea that you have to have big wins to be rich, and I would argue the exact opposite. Big wins are hard to come by. The market doesn't give away money very often, and in day trading especially. And 8 cents a day at 50 contracts is $400 a day, which is $2,000 a week. And since we averaged 300 and change on trading days last year, that means we averaged less than 8 cents a day winning and made 83,000. So trade what you want. Small wins are infinitely easier, lower risk, and pile up faster than you think. That was one of the biggest revelations I had in trading, actually. Every trade for me was trying to trade to get rich in a day. Because, oh man, there was a 70-point move. If I had that one, I'd have 25,000, and the next time I'd have 100,000. Then I could put it all in and get $1 million. Well, 70-point moves don't happen often, and they're hard to catch, and they're hard to understand. And you're going to get emotional. You're going to get very emotional, and you're going to chase when you lose, and you're going to have problems managing your capital. And you have a long time to wait before you realize profit. Where 8 cents just ain't that much. It'll happen in one bar a lot of times. And I'm not saying you get 8 cents and you shut down the trade and you move on with your life. I'm saying wins and losses, that's how it averages out. And you don't understand the power of compounding. Baseball games are won with base hits more than home runs. That's exactly right. Base hits get you in the Hall of Fame unless you're Pete Rose and you gambled on your base hits. He should still be in the Hall of Fame, though. One of the great travesties in all of sports. Especially when you got the Dodgers pitcher, first baseman, just openly being known for gambling on baseball. Ote, whatever his name is. I don't follow baseball that much, but I was a Pete Rose guy growing up because I grew up in northern Kentucky. Thoughts on Bitcoin? This is more for NASDAQ. I do Bitcoin every day in my room, so if you want to, Ichiro Suzuki. That's another Hall of Famer on 1 million hits. Tremendous baseball player. My wife's from Seattle. She knows him well. Bitcoin, though, this isn't really, I'd cover that every day in my room. So if you want more updates on that, you can get in my room. But they hit a key level and they rejected it. By the way, we're getting ready to hit 7,000 if we haven't already. I'm on the wrong chart. We're getting right up into that 7,000 range. Made a new high here like we expected. So let's go to ES and watch for a second. They just barely made a new high on ES. We're looking for 7,000-ish. But this is, if this, then this. If this, then this. All you got to do is follow the levels. They didn't make it here, so we came back down to support and then back up to where we needed to go to. Just follow the levels. They're there all the time. They hand you the information. But Bitcoin hit I think it's got a chance to turn bullish at least to 100K, but it'll depend on a few things. But I cover that in depth in my room. Same thing, George, on oil. Well, first of all, I don't really cover oil. I'll cover oil companies. Oil itself is very, in my opinion, politically motivated. I think if there's one place that I truly believe they manipulate the market and in a way that's not on the up and up, I think it's oil. Because it's so important to gas prices, which is so important to presidencies. By the way, they're 7,000. So I don't like being in oil at all, but I have said for a while that I think oil's prices will be going up, and inflation will be coming back in a big way, and I don't think it's really gone anywhere in the places that it matters. The average family is getting crushed at the grocery store still. Beef is absolutely stupid. Overall, I think in the big picture, inflation is coming back, which means oil is likely going to be higher, but I don't break it down for that. And also, this is, again, not the platform for that because we're trying to trade and trades happen all the time and we can't be jumping around on charts and switching the indicator around and different stuff like that. But again, I go over basically all the only things I don't cover in my room. I'll cover anything you ask about on the midday call. So we have a midday call every day, lasts about 40 minutes to an hour. I'll go over any stocks that anybody brings up, but I won't do oil or currency or crypto other than, Bitcoin. The other cryptos, just all of the manipulation and stupidity of them drive me nuts. And I realize Ethereum and XRP are big ones, but Bitcoin is the bellwether of it, and they're the ones that most people care about. The other ones to me are ancillary. So I only cover Bitcoin, and there's too much craziness around crypto for me. Rare earths and metals are replacing oil as the inflation guys. That's a fact. There is a currency war going right now, and we're seeing it in gold and silver and everything exploding. But again, I think that risk is getting high on the precious metals. Doesn't mean I'm out. I still have 25% in with a trailing stop on them, but I think the risk on the people that are out there paying like $300 for silver right now. I don't even know what the hell that is. You're paying 4 times the rate because they won't give. I think that's in China or somewhere that they're paying like 300 for silver because they don't have many liquidity. But all of that comes to an end. Silver and gold getting hit a little bit today, actually. All right, we hit 7,000. We're starting to see a little bit of a retreat off of that level. They actually hit 7,001 and 25 cents. They can until we see something that indicates a reversal, there's no reason to front run it. They can absolutely squeeze through this level. Remember, 70.40 is the level we're looking for, and the one-day max on the SPY is way high, and there's not a lot between this and that. So either there's 695 is in between there as a major resistance. But remember, we're in blue skies. They can squeeze right through this. This would be the next level to watch at 695 and then 697.50 roughly. So they still have plenty of room to explode this higher. So we don't front run it. When you get to new all-time highs, very often it can squeeze, but I don't necessarily think that's the case today just because 7,000 on ES is such a big number. So we'll see if we get a full rejection here like we're expecting. If they're going to reject, though, this would be the level I would want to see them reject from. Clearly trend day, but into this 7,000 resistance, do you plan to break the rules again with a third bullet, or should I go snowshoeing in the mountain? Just from this area, if they take out, I may give them one, maybe 2 bars here and see what happens. If this bar turns out to be, it's pretty decent volume. It's not great volume, but for midday volume, it's it's an uptick in volume on this bar. So we'll see if they're able to follow through. It's bigger than just about any bar except for that midday news event. So it's for a midday bar, it's decent volume off that level. We'll see if the algos hate it or not. You'll know soon. If they do reject and they get back below this high right here, 693.15, they're likely to back test 692.80 basically. And then your next level is going to be 692.50 basically, 55, whatever. Again, guys, we shouldn't be trading today. Being for perfectly forthcoming on that, but it is a live call and you guys are here to trade, so I'm still trying to take reasonable trades. Rejecting this area here was reasonable with this sell. Rejecting this area we're at now because of the 7,000 level on ES is reasonable. So I would not be shocked to see a trap here. Be quite honest, something like this. So if we get a sell here and it misses, that doesn't mean they aren't going to sell off. It means they might be trapping. Terry Rozier equals Jamie Dimon. That's funny. I'm going to give it till noon Eastern. So it's this bar plus one more and see if we get, any kind of, if we get to noon and it looks like they're setting up a short, then, we'll see. As I said, you should generally stop trading around noon anyway. I take it till 1 o'clock most days just because that's when my call is. So it's a seamless kind of transition from trading into teaching and going over charts and then moving on. So we'll give them till noon. If there's no setup that looks like it's coming to fruition, then I'll be done for the day then. Small cats have perked up and QQQ too strong. Not for me. Good luck, everyone. See you next week. Take it easy, Will. Thanks for being here. Appreciate you. All right, looks like you're going to go try for this high again, potentially trap the shorts. So that's what I was saying earlier. They hit the 7,000 level and gave you the rejection that the shorts were looking for. So everybody front runs the beginning of this. That's why I said do not front run this. Then they trap you, take you back up to the highs, short stop everybody out by poking above the high, and then they'll make the move if that's what they're going for. Again, it's always if then. If they give us the move, we'll take the move. If they don't, we don't front run it. We just sit back and wait. It's a game of patience, understanding, and edge. There's the poke above the high to stop out the shorts. Most of the shorts put their stop right at the high or just below. And this is what they train you to do, right? They tell you, hey, everybody's going to short here and they're going to put their stop where? Right at 7,000 or right at this high. Instead of saying, hey, put your stop up a little bit for traps. And then they poke above it and then they reverse it. Now, this wasn't a setup yet for a short anyway. However, my point being, this is what they do. They convince you to put your stop somewhere. They set you up. They get you a good entry look, and then they go take out your stop, and it seems like it's personal, and then they reverse and make the move. Because most people are that they're looking for on the future side of things, 3 to 5 futures points is probably where they set most of their traps or target most of their traps. So 7,000, 3 to 5 would be where you would want it to stop. If they get above that, then continuation becomes more likely, and 7,011 would be, or 7,010, sorry, would be the next number. Overall, the next major target is that 7,040 area on the ES or 7,000 SPX. I would expect them to push into that. Whether they pull back first or not is to be determined, but that would be the next area they're going to squeeze into, is that 7,040 ES zone. Anthony, thanks, Jacob. Some nice trades today. Thank you, Anthony. Thanks for being here. Appreciate you. Again, guys, normally we'd be sit on hands today. We did get a winning trade and a break-even trade, so nothing bad happened, but we did go against the trading rules simply because this is a live call and we haven't had too many trades on our last few live calls. They've been a lot of trend days, so I wanted to see if we could manufacture a couple of good entries, and we did. One was obviously break-even, so it was an okay entry. The other was a good entry. It was a nice winner. Last minute here before noon, and currently they're still pushing higher, so I'm not going to continue to wait and chase since we shouldn't be trading anyway. We have a winning day. There's no sense in throwing that away. What is validation of no trap? If they get above 7,005 and kind of hold there, you don't want to see them retreating like they are now. You want to see them close a bar over 7,005 and then kind of back test and hold. So they've already pulled one back test and hold that would be the setup for the trap. If they back test and hold anything again and then go out, then this is unlikely to be the rejection we're looking for. Okay, they pushed it out into this is a pretty solid bull bar on decent volume, and they're pushing above that. So we're going to go ahead and call it for the day. Is there a general rule? Not really a general rule. No, you're just kind of watching for acceptance of price. And that's the biggest thing. So they did not accept the break of this price. So they broke out above. So here's the breakout level, right? They went above it and they back tested it and they broke it, albeit by a tiny bit. Had they come up and done this, that would have been price acceptance of we want to be lower. Instead, they did this and they never came back. So that is price acceptance of we want to be higher for now. Again, they can go up here and a couple more points and still fail. This is getting into kind of nosebleed area for ES and against some resistance. But you're seeing an improving ADD now, an improving RTY. So the setup isn't real clear here, and it's not one that I'm really interested in taking, especially since we shouldn't be trading anyway. But the general rule is you're looking for acceptance of price. If they hold and take out this high, that is a indication that they want to continue in a and hold this support. It essentially means this is your support, and breaking this would be the start to a bigger move down. So they broke through, they set it, they did not come back and break back through, so this becomes your support zone or your support level. Breaking back below this low would tell them that this support is now breaking, and this was more of a trap bull, and you're going to come down to at least 692.78, if not down into 692.60 and then 692.50. So it doesn't mean it's going to be a big. All they're trying to do is shake. They're just shaking the tree. So they want as few people going in the direction they're going. So they want to set the shorts up, trap them, get them out. They set the longs up, trap them, get them out, and then go long, or they continue short. However they're going to do it. But they're just shaking the tree in both directions until they can kind of shake and weed people out and then continue. That's what they did here. They came up. They did it twice. They shook the tree twice. They said, oh, we're going to 7,000. No, we're not. And then they said, oh, we're going back. We're going to take it out. And then they said, no. So they just continue to trap and shake the tree, and then they make the big move without you. That's the whole goal for the market makers. But yeah, anyway, got about an hour here. I'm going to grab some lunch before my call. Again, guys, if you want to join the live room, please do. Bill Anderson, thanks for being on this call. And if you're looking for a trap, watch for them to fail in this zone right here, 7,002 to 5. If they fail and break down and give you a sell signal, you want them to break this support, and then they should have some continuation after that. All right. Have a great day and week, everyone. We'll do it again next Wednesday. Thank you for being here. Hit that like button if you learned anything today or you made some money. Appreciate you guys. Thanks very much.